Thank you. I know we are a bit running out of time, and we don't want to be the obstacle between you and your little bite. So I will invite all of you to take a seat, and then we go through this important panel. I'm Joseph Sani. I'm the head of the Africa Center here at USIP, the U.S. Institute of Peace. So I will invite all of you to take your seat, and then we are about to start this panel, Beyond AGOA. So in the course of these 30 minutes, we will explore some of the issues and the factors that may go beyond AGOA, but impact, nevertheless, its success in promoting economic growth, economic development, and prosperity on the continent. As one of the vice presidents at U.S. Institute of Peace, let me just remind you that the U.S. Institute of Peace was created by Congress in 1984. Our mission is to prevent and resolve conflict. And one may ask, why co-host with our partner CCA, the AGOA Private Sector Forum? We all know through studies that economic growth, shared prosperity go hand in hand with peace and stability. So it is very important as we, USIP, look at issues of conflict, peace and security, to take a deeper look into dynamics of economic growth and prosperity. And that's exactly what AGOA does. AGOA promises trade, investment, jobs to Africa. And it's a great honor then to be moderating this panel. And we have a great panel, a great set of panelists. I will start with Dr. Zainab Usman. Dr. Zainab Usman is the Director of Africa Program at the Carnegie Endowment for Peace, for International Peace. And before joining the Carnegie, Dr. Zainab was a public sector specialist at the World Bank. Thank you for joining us. We also have Mr. Tony Carroll, who is also a senior fellow, non-resident fellow at the Carnegie, but also a director at Access Fund, which is an equity fund promoting businesses in Africa, but is also one of the drivers of AGOA, almost a quarter century ago. Thank you for joining us. And Tom Shee is a distinguished fellow at the Africa Center at the U.S. Institute of Peace. Tom Shee just co-directed the USIP Senior Study Group on critical minerals. Prior to joining USIP, Tom Shee was a senior staffer in Congress and was one of the architects driving the AGOA Act. So, Tom Shee, thank you for joining us today. With that, I will ask our panelists to provide us with a very brief opening statement, opening remarks, 2-3 minute max, and then after that we'll dive into questions. Let me start with Dr. Zainab, please.
Great. Thank you very much for having me here, Dr. Sani. Good morning, everyone. Great delight to be in your midst today for this private sector forum. Thank you very much to the Corporate Council for Africa for organizing this discussion. I want to start with something very boring and technical, but I think it's very important, which is the challenge of industrialization and structural economic transformation in Africa. That is the key development challenge for the African continent. It is the key to having the African continent achieve sustained growth, sustained development, and improved human and social well-being. Therefore, any discussion on trade between the US and Africa in particular, whether through the mechanism of AGOA or beyond AGOA, as this panel is entitled, should advance this objective of achieving industrialization and structural transformation in Africa. But it should also advance US objectives of, a variety of objectives here, of having a good relationship with Africa, but perhaps also strategic objectives of having a partner in Africa in a changing geopolitical environment. So let me break that down with a number of key points, maybe 2 or 3 points. Just let's revisit why industrialization is important for the continent. We know that this is a continent that has the world's youngest and fastest growing population, estimated to reach, 2.5 billion people or so by 2050. And right now, it is a continent that in aggregate is producing 11 to 14 or 15 million people in the labor market every single year. These are particularly young people who need good and productive jobs. Most of those good and productive jobs are just not forthcoming because most people end up in low-wage, low-skilled, informal work across the African continent. Therefore, achieving industrialization by increasing productivity in different sectors, the manufacturing sector in particular, but also services industries is absolutely critical. This is also an objective that is very much recognized by the African Union in the African Union's Agenda 2063, as well as the development documents and strategies of various national governments. A second point I want to make is then to think about why the trade between US and Africa is absolutely important to this objective of industrialization and structural transformation. A productive trade relationship that benefits Africa, but that also benefits the US, should not only be underpinned by a tariff reduction, which basically is what AGOA, in many respects, was envisioned to do in the early 2000s, or the Trade and Development Act of, I think, the year 2000. The objective then, and if you read the text of the bill, was really to try to integrate African economies into the global economy, right, through trade integration, tariff reduction. But we've now come to realize that you actually need more than that. You need investments in sectors in African countries where goods and services can be produced for export. So this is something. And then thirdly, and I'm just going to conclude on this point, is that we also have to, something that I feel like we don't often do, but I think we have to put it front and center, that this productive trade relationship with Africa is also in the interest of the US. We have to talk about alignment of interests. We often don't do that, but maybe because when the Trade and Development Act was envisioned in the early 2000s, it was more with respect to helping Africa integrate into the global economy. I think the conversation needs to be slightly different, that it is in the interest of the US to have a productive trade relationship with Africa, for Africa to industrialize and to be able to have a relationship that goes beyond aid and charity. So I'm going to stop there.
Thank you so much for bringing those dimensions, because I think we have been focusing too much on the operational aspect of the act itself. The fact that you are bringing it, the strategic partnerships around the act itself is important, the relationships and the industrial base, which I will come back to it later, but thank you for sharing those points. Tony.
Thank you very much, and I'd like to add my thanks to the U.S. Institute of Peace, to the Corporate Council in Africa for providing this terrific venue. I think the only person in the room that's been to more AGOA forums than myself is Jas Betty. I've been to 20 of 21. He's been to all of them. And the reason I can go to the one in Togo is because I had my hip replaced during that time. The thought of flying on a plane with a hip replacement didn't sound all that good. I mean, I think we do tend to be a bit hyper-focused on AGOA, but much of the investment into Africa and much of the trade with Africa is not AGOA related. So what I'm going to talk a little bit now are what are the sort of enabling environment challenges or opportunities that I think constrain or incentivize investment. And while I probably put my lens on as an investor myself, I think this is generic to investors, whether it be Canadian, Australian, or European, and I think they view these factors similarly. Firstly, many of the investments that are going to be enabled to achieve the industrialization vision that Zeynep just articulated are often very long-term investments. So if you take a look at a mine, a sector that I worked in extensively, the average length of a time from a discovery to an actual full production of a mine is somewhere around 15 years. If I'm an investor making a long-term investment of that nature, where I'm not going to see the benefits of my investment for many years down the road, what's going to inspire me or incentivize me is predictability. And predictability, to me, at the fore of predictability, is what is the legal and policy environment that I'm going to feel comfortable with to making such a long-term investment. In 5 or 7 years, am I going to have to worry about an expropriation or a change of law or some competitor coming in and cutting my knees out from under me in my investment? So that's one thing that I think investors are going to look at is predictability of the legal and regulatory or policy environment. The second thing that as an investor is going to be looking for, one of the constraints that we found after the passage of AGOA, and as Tom knows, I've been involved with AGOA since actually 1997 with Congressman Jim McDermott when he pitched this vision of integrating Africa into the global trading environment. One of the real constraints that we found in the supply response to Africa, and Flory was at USTR when we undertook some of these studies, is the smallness of market. That individual 54 markets are themselves, with some exceptions, Nigeria, the Congo, and South Africa for sure, but many of these small markets are just too small for the U.S. to come in to look at investing and expanding their business presence in Africa. Yesterday I was in a meeting with the South African Minister of Trade, and in that meeting was Pioneer Foods, which is a subsidiary of PepsiCo. Pioneer Foods has invested in a very large investment into South Africa in the food area. And what's going to motivate their investment and really achieve their objectives is the ability of being able to sell those goods across borders. So Africa has to accelerate its own internal regulatory trade facilitation environment to really give the incentive for investors to look beyond an individual market and really incentivize them like Pioneer Foods, which will come in and raise the standards of food production in South Africa, the packaging, processing. I think it's a huge investment that many people don't probably fully appreciate. And then the last thing is the presence of institutional strengths. That is the banks, the financial services industries. Those are the professional services that are going to help me understand and facilitate my investment, whether they be large banks like Standard Bank or maybe the presence of engineering services like SRK. These are global standards and brands that we know and can rely upon as giving us good independent advice and facilitation to trade, facilitation and financing that we're going to need, or ABSA Bank or others along the way. So those are the three things that I look at: predictability of legal and regulatory environment, the ability of Africa to grow its markets from beyond just a pure national level, and the presence, if you would, of facilitating institutional structures such as professional services and financial services.
Thank you, Tony. Tom?
Thanks, Ani. And I just want to underscore one thing that Zeynep said about the importance of thinking of AGOA in the U.S. national interest. And I think we can all agree not to act would really be quite a setback for the U.S.-Africa commercial relationship. It would be bad for African economies. It would be bad for our economy. We certainly couldn't advance economic partnerships if we withdraw the kind of benefits that AGOA offers. It wouldn't be good for diversifying our supply chain. And thinking back to Flory's comments, stressing the urgency of moving ahead on AGOA, I couldn't agree more. And we shouldn't lose sight in talking about improving AGOA of the fact that this is a very powerful tool. It essentially guarantees African economies preferential trade access to the world's largest and most dynamic economy in the world. And that is a solid foundation for an economic relationship. That is what AGOA is. Again, there can be additions, there can be improvements, but let's, again, not lose sight of the fact of what we have. Now, having said that, I think there's a lot that can be done to make AGOA more effective. I think we all agree, and those who were involved in creating AGOA in various capacities 25 years ago, it probably hasn't lived up to expectations. That's not to say it's not, it hasn't accomplished a lot in many countries, and it's not very important. But there are things we can do to help U.S. companies, because frankly, U.S. companies need support and encouragement to invest in Africa. And so when I was on the Hill and we first passed AGOA, there was discussion about we need more foreign commercial service officers. And we had a paucity back then. I don't think we've really increased that number by much at all. We need a more functioning or more efficient development finance corporation, an XM bank. Anyone who's ever traveled in Africa, discussed business, what we hear is China gets things done. They move quickly with financing. That's not to say that DFC, we have a different model, but I don't think anyone can disagree that these institutions need to be more efficient. We need more aggressive commercial diplomacy by our U.S. ambassadors, and we need a presence on the ground. We recently released here at USIP a major report on critical minerals in Africa, and Tony served on that board. And one of the things we flagged is we're building the Libido Corridor. We're interested in critical minerals in Africa. We don't have a consulate in Lubumbashi. We have a diplomatic presence in Kinshasa. Lubumbashi, the Copper Belt, that's a world away. We used to have one, but with the end of the Cold War and right around the time, well, a little before AGOA, we decided to dramatically retrench from Africa, both diplomatically and commercially. If we want to be serious about taking AGOA and making the most of it, we need other aspects of our commercial diplomacy, which I mentioned.
Thank you, Tom. I mean, for raising the importance of, it takes two to tango. So as much as we are asking African countries to open their markets, to build the institutional framework, there's a lot that needs to be done from Washington as well. So thank you for bringing that up. I will come back to Zainab because you mentioned industrialization, the industrial base, but that takes some financing. So what's your assessment of the financing landscape today in Africa?
Before I get to the financing landscape, I think I want to pick up on a point that has been alluded to, that at the end of the day, if we want to see a very productive and constructive trade relationship between the US and Africa, the alignment of interests is very crucial. But also, we maybe want to go back to certain basics, which relate to, I would say, the principle of comparative advantage, right? Principle of comparative advantage here, at a very basic level, you trade based on what you have, right? And a lot of African countries are very much and very well endowed with minerals and metals essential to the clean energy transition. And I think this particular area, this particular endowment, and this particular sector could be the basis of a revitalized trade relationship between the US and Africa. The US, as we know, is trying to diversify the supplies of these minerals and metals that are essential to the clean energy industries being built here domestically, trying to diversify the supplies away from competitors, whether it's China or elsewhere. But African countries have these minerals in abundance, and we know that the demand for these minerals is going to increase significantly, over 40-fold for lithium, over 25-fold for graphite and nickel and cobalt. These are all very much present on the African continent. Therefore, what is needed to fuse these interests together, but also this notion of comparative advantage to kind of tie it together, and this is perhaps where the financing comes in, that when we think about a revitalized trade relationship between the US and Africa, even with respect to these minerals and metals, it should not be a trade relationship that emulates some of the destructive practices of the past. And maybe still the present, in which a lot of African countries are exporting unprocessed minerals and metals around the world, to Europe, to China, to Japan and elsewhere, but that investments are made in refining, value addition and processing that could help African countries industrialize, but then that could help meet US strategic objectives of importing refined minerals and metals that will not be refined and processed domestically, actually, for a variety of reasons, going back to comparative advantage, going back to the skills composition of the labor force in this country. I don't think people want to be refining and processing lithium and cobalt and these things. These are lower segments of the value chain that can be located whether in Zambia or DRC or Nigeria or Tanzania. So the question of financing, I think, boils down to also identifying specific sectors in which African countries have endowments, they have an interest in achieving value addition, but that could also help advance US strategic interests of diversifying the supplies of these minerals.
Thanks. I know, Tom, as director of the USIP Critical Mineral Report, I'm sure you have a thing or two to add on what you have just said.
Yeah, no, sure. We defined it as mutually beneficial partnerships with Africans to develop the critical minerals. It's obviously in the U.S. interest to see these minerals mined and processed in Africa. We have the energy transition. We also have needs for our defense industrial base in terms of accessing the minerals. And I think here we're at the U.S. Institute of Peace. We have to be very realistic, as you've said, Zainab, that the development and exploitation of natural resources in Africa doesn't have a good history. This is not going to be easy to do in a way that doesn't. Mining is a challenging industry. We have environmental, we have labor issues, we have corruption issues. All these things have to be challenged if the development of natural resources is going to work to Africans' benefits, and if we want to have those kind of partnerships that we need. And so I would stress again the tools that I mentioned earlier that show U.S. engagement that are going to help. We don't have many U.S. mining companies in Africa. They need help, they need security, they need assurances, we need DFC, we need XM, we need aggressive commercial diplomacy, someone to go to bat for them when they have problems with local governments. And so I think it's an exciting time, there's great opportunities, but also this has to be, we have to move ahead on all fronts in terms of bringing the full force of what the U.S. government can offer if we're going to encourage U.S. mining and processing activities.
Thanks. Tony, as mentioned, you have been on the front lines of trade promotion in Africa. Objectively, does that work? Trade promotion programs?
Look, I think we lose sight of the fact that this is a trade and development bill, that we focus on tariff issues, which are, of course, important, trade facilitation issues, but I don't think we've spent enough time on focusing on the development aspects of this bill. Earlier, it was cited the trade hubs. The trade hubs, I think, did a number of very good things. Firstly, they modestly improved the trade relationship between Africa and the United States. But what I don't think gets measured enough is the impact of the trade hubs on facilitating trade within Africa. I think there is a lot of things that the trade hubs facilitated, such as the establishment of standards, such as the removal of border barriers, documentation of trade. This is stuff that I think the trade hubs really got into the weeds on and really helped facilitate trade, again, not just between the United States and Africa, but within Africa. And let me cite what I think is often misunderstood or forgotten statistic. Africa's trade outside of Africa is still largely, unfortunately, a very minimally beneficiated story of raw products being sent out of Africa. Africa's intra-Africa trade is industrial goods. That is really where Africa is going to see much more value addition, much more deeper industrialization, if it can continue to focus on expanding its openness in its borders to facilitate the type of investment that's going to be really much more industrial in nature. And then I think you're going to find investors, whether they be from the United States, Australia, US, or even Asia, that are going to come in and take a part of that story. So the trade promotion, I think, is facilitated by opening up African borders. And I think that we shouldn't lose sight of the impact that trade facilitation through the trade hubs has done to complete that story of not only enhancing our trade relationship with Africa, but also enhancing Africa's ability to trade among themselves.
Thank you. So I will build on that idea and then bring in the African Continental Free Trade Area. Zainab, do you see the connection between the trade area and AGOA? How can we both programs be optimized in a way that is mutually beneficial?
Okay. I think one kind of connection that I see probably isn't the most obvious one, but I think it's a very important one, is around trade facilitation, enabling or kind of, streamlining, harmonizing, simplifying, modernizing processes around trade, whether imports or exports. I think that would be an important connection, and let me explain what I mean here. At a sub-regional and at a continental level, it is still very difficult for entities to transact with one another, to process payments across borders, to settle trade, to do other kinds of transactions. And as we've heard from the previous panel, the African Continental Free Trade Area, one of the key initiatives that it has rolled out, I think via AfCFTA, is the Pan-African Payments and Settlement System, which is meant to enhance cross-border payments and transactions by increasing the convertibility of African currencies. This important initiative, I would say, needs to be supported because it's not just in the interest of Africa. I think ultimately it will benefit the AGOA framework of the trade relationship between the US and African countries for all of the reasons that we know, right? That if you have a very small economy and it makes sense to kind of locate certain kinds of production in a neighboring country, then ensuring that you have the systems of payments to allow those activities happen at a sub-regional level will be absolutely important to enable them produce at scale and in a competitive manner to be able to export to the US, right? So I think overall, kind of stepping away from the weeds here, trade facilitation is going to be absolutely crucial. And I think it's an area where a lot of support can be provided by the US on that front, whether it's at a national level, working closely with the trade and business associations in a lot of African countries. They know what their key challenges are around trade facilitation at a national level. And then at a sub-regional and then continent-wide level, working closely with entities like AfCFTA. I think they're rolling out a lot of initiatives around trade facilitation will be absolutely important. So that is one important link that I see between the two.
Thanks. We are at the U.S. Institute of Peace. I would be remiss if I don't ask a question related to peace and security. So Tom, you are fellow, distinguished fellow at the Institute here. So what recommendation or advice will you give to the United States and African countries on how to optimize AGOA as a driver of peace and security on the continent?
No, thank you, Sonny. And I would underscore what Tony said. We need to think about AGOA as a development bill. It's a trade bill, but it also has profound development implications in terms of African employment. And the roots of conflict in Africa are complex. There are many factors go into driving conflict, but clearly one is economic disgruntlement, high unemployment. We see jihadist groups, they recruit from youth who don't have jobs. It just makes it very easy for conflict to spread. And so we cannot wait. We should pass AGOA and appreciate that, yes, it's good for good for the U.S. economy, it's good for African economy, but also, it's also very good for peace and stability and building social harmony in Africa.
I know we can carry on giving your expertise, but unfortunately, time is not on our side. I will just quickly capture some of the key points we've learned here. There is an urgent need to boost Africa's industrial base to spur economic growth and development. I think it is also important to put AGOA in the context of the U.S.-Africa geostrategic partnership. AGOA is not only a trade program, it's a development program as well. And that will require new mechanisms and instruments that recognize that dimension of development. It is important to enhance the legal environment for trade and market integrations to attract foreign investment. That's something you insisted on, Tony. And it's also important to strengthen U.S. commercial diplomacy. And through instruments like DFC, MCC, and beefing up our embassies, and maybe add more consulates to make sure that we have a much more robust diplomatic coverage in the continent. Therefore, I think if we do those things beyond AGOA, we hope that AGOA will help promote not only economic development, shared prosperity, but also peace and stability on the continent. And thank you so much for sharing your thoughts, and then thank you for the audience online and in person for staying with us. We don't want to be an obstacle to your little bites, so with that, I will ask you to join us to congratulate our panelists, please. So we still have 5 minutes. The little bites will be served here on this floor and upstairs, correct? Thank you.